Welcome to FinTech Matrix, where tech meets money and trends become power. You heard it here first. Today, August 6, 2025, we're examining what's driving your financial world and reshaping technology across the globe. First, we break down fresh stagflation fears, crypto's institutional pivot, and UK growth momentum as Woodford faces a regulatory reckoning. Next, we explore how US regulators are responding to AI, how stablecoins are reshaping merchant payments, and how the UK is ramping AI investment toward a trillion-pound future. Finally, actionable insights for what you should watch in this global race to regulate, automate, and digitize. So grab a cup of coffee, settle in, and let's unpack what matters to your wallet and your world over the last 48 hours, here on FinTech Matrix. Let's start with what's moving the markets today. Here's your finance update. U.S. finance. Stagflation watch. Markets were rattled this week by signs of stagflation as the ISM Services Index for July posted stagnant growth paired with rising input prices. That's the wrong kind of inflation, and traders reacted quickly. Yields on 10-year treasuries rose to 4.38%, and the S&P 500 closed Tuesday with modest losses despite a tech-led cushion. The data challenged investor hopes of a September rate cut. Fed's soft pivot. However, comments from San Francisco Fed President Mary Daly offered a glimmer of policy flexibility. She stated that inflation is trending downward and that the labor market shows signs of easing, suggesting the Fed may move toward accommodation later this quarter. Earnings and corporate strategy. Meanwhile, industrials and exporters are under pressure. Caterpillar warned that U.S. tariffs could cost the company $1.5 billion this year, triggering a 3% dip in shares. On the positive side, Palantir's AI contracts boosted its stock by 6% as investors bet on defense tech. Trade deficit and economic outlook. The U.S. trade deficit narrowed to $60.2 billion in June, the lowest gap with China in more than 20 years. Economists view this as evidence of sustained reshoring and supply chain reconfiguration, particularly in critical tech and energy. UK finance. EV market reversal. The big story in the UK was the electric vehicle shakeup. Tesla's July sales plunged 59% year-over-year, while China's BYD surged 325%, driven by changes in EV subsidy criteria. The shift signals major rebalancing in the UK's auto sector and a likely policy pivot. Regulatory crackdown. In a long-awaited decision, the Financial Conduct Authority, FCA, fined former fund manager Neil Woodford £46 million and imposed a permanent ban from regulated financial activity. The action follows years of fallout over the Woodford Equity Income Fund collapse, which trapped over £3.5 billion in investor funds. FTSE resilience and growth outlook. Despite the headlines, the FTSE 100 rose 0.4%, closing at 9,169.6, with strong earnings from Smith & Nephew and Palantir offsetting risk concerns. The IMF upgraded its UK GDP forecast to 1.2% for 2025, and analysts now anticipate 2 bow rate cuts, dropping the base rate to 3.75% by year-end. Chancellor Rachel Reeves reiterated her commitment to fiscal discipline, calling the IMF revision validation of balanced growth. Global finance. Sustainable finance showdown. According to a new Time investigation, London, Abu Dhabi, and Singapore are racing to dominate the next phase of sustainable finance, leaving the U.S. behind. With ESG markets projected to hit $100 trillion by 2030, experts warn that lack of regulatory coordination and political gridlock could cost U.S. asset managers critical global positioning. M&A and infrastructure capital. On the M&A front, sovereign wealth funds from Norway and Saudi Arabia are ramping up stakes in infrastructure and green debt. In Asia, Singapore's Temasek initiated talks to back new climate tech exchanges, hinting at further regional fragmentation of financial influence. Crypto market. Stablecoins enter prime time. The U.S. fintech ecosystem saw significant movement toward institutional stablecoin usage. Anchorage Digital, FIS, and Athena Labs announced a framework for onboarding USDTB, a yield-bearing stablecoin pegged to U.S. Treasury bonds. The product aligns with Genius Act compliance architecture, suggesting it's structured for near-term regulatory approval. Crypto merchant adoption. New Pay with Crypto integrations launched with several enterprise merchants. Customers can now spend Bitcoin or PYUSD at checkout with instant fiat conversion, expected to reach 4 million merchant endpoints by 2026. Bitcoin steadies. Bitcoin hovered at $63,400, while Ethereum stabilized at $3,420, reflecting trader patience ahead of expected SEC enforcement updates on DeFi and staking. Policy Watch. There are also reports that the Treasury Department is preparing a new classification framework for crypto brokers, expected by mid-September. Insiders suggest the guidance will directly affect wallet providers and liquidity aggregators. Finance wrap-up. Bottom line. The U.S. economy is navigating a delicate balance between inflation control and growth, with Fed flexibility in sight. The UK is simultaneously managing sector disruption and regulatory cleanup, while showing stronger than expected economic resilience. Globally, sustainable finance and tokenized markets continue to shift financial power centers away from the West. Now shifting to the world of innovation, disruption, and digital infrastructure, here's your tech update. U.S. Tech. SEC AI Task Force launched. The Securities and Exchange Commission formed a dedicated AI oversight task force to examine risk exposure and transparency in algorithmic finance, particularly for robo-advisors, generative credit scoring models, and trading bots. The task force will publish a public risk registry later this year, aiming to guide ethical development in FinTech AI tools. Grasshopper Bank funding round. New York's Grasshopper Bank raised $46.6 million to expand its fintech-first digital banking services. The raise signals sustained investor appetite for business banking disruption despite margin compression across the sector. Bullish files for IPO. Crypto exchange Bullish, which owns CoinDesk, filed for a U.S. IPO valued at $629 million. Analysts say the listing could test investor tolerance for crypto-adjacent media and infrastructure exposure in a highly regulated market. Crypto payment infrastructure. Fintech startups are rapidly scaling wallet-to-fiat conversion at checkout, including Bitcoin Lightning and PYUSD flows. Merchants are reporting faster settlement and lower transaction costs, two key barriers to traditional credit card dominance. UK Tech. AI investment accelerates. A new government report shows the UK AI sector is now valued at £21 billion, with projections of £1 trillion by 2035. The UK Compute Roadmap, launched in July, promises £2 billion in public investment to support AI infrastructure across healthcare, defense, and finance. Regulatory convergence gathers pace. At the CFTC, Europe Regulatory Roundtable in London, British officials joined their EU and US counterparts in drafting collaborative AI and digital asset governance frameworks. FinTech leadership shifts. Clearbank named David Samper as its new CFO. Alibari's appointed Rob Fairfield as CEO. Unity Trust Bank announced expansion of its ESG-aligned banking vertical. A Libyan Islamic bank, via Dutch partner Backbase, deployed a new mobile-first digital banking system in the Middle East and North Africa region. Global Tech. Brazil's QI Tech raises $63 million. Sao Paulo-based QI Tech closed its Series B round at $63 million, with plans to scale embedded finance across Latin America. AI safety at global scale. International regulators in Switzerland, Japan, and Canada are converging on shared AI safety standards, aligning with OECD AI principles. Meanwhile, OpenAI's partnership with the UK government to deploy AI tools in public service continues to expand. Tech wrap-up. Bottom line. AI governance is no longer theoretical, it's an operational priority. From the SEC's regulatory task force to the UK's AI public investment surge, governments are moving from ambition to architecture. Stablecoins, crypto payments, and IPO activity are signaling institutional comfort, even as oversight struggles to keep pace. And that wraps up today's breakdown. From stagflation pressure and stablecoin expansion to regulatory shakeups in UK finance and US AI oversight. And from crypto payment milestones to AI's trillion-pound roadmap, one thing's clear. The next phase of fintech and tech dominance will be defined not by innovation alone, but by the rules, rails, and risks we put in place. If today's episode gave you clarity, context, or an edge, give us a like, subscribe, and drop a comment below. Your take. Would you trust a stablecoin pegged to treasury yields? Or does decentralization demand separation from state assets? And remember, this is FinTech Matrix, delivering money, tech, and trends to your doorstep. Stay ahead, stay informed, keep watching FinTech Matrix. Thanks for watching, and we'll see you in the next one.